Hi, I'm Jason Silver at Silver Law PLC. If you have foreign assets, you may be required to file certain forms with your income tax return. On June 18, 2014, the IRS revised its Offshore Voluntary Disclosure Program. Under a new program called the Streamlined Domestic Offshore Procedure, if a taxpayer's failure to file the foreign bank account record, also known as an FBAR, was due to non-willful conduct, which the IRS defines as negligence, inadvertence, or mistake or conduct that is a result of a good faith misunderstanding of the requirements of the law, you might be eligible for this new program. Under this new program, the taxpayer would be required to file their last 3 years of income tax returns, 6 years of foreign bank account records, and pay a 5% penalty on the high balance of their foreign bank accounts over the last 6 years. As part of the new process, you will also be required to sign a certification explaining your inadvertence or your non-willful conduct in not filing a tax return. After you file this under this new streamlined program, you will be required to include the 5% penalty with the amended tax returns. People always ask, well, would I be audited by the IRS by doing this procedure? And the answer is you're more likely to be audited under this program as you would normally in filing your income tax returns. Additionally, the Internal Revenue Service wouldn't be looking for any penalties on these amended tax returns you'd be filing. The government would not require you to sign a closing agreement. However, this does not buy you the protection for a criminal investigation. Once you file the certification and application to the IRS for the streamlined program, the IRS will process it. If they find that your conduct is willful, then they will not allow you to enter into this program and may refer you criminally for prosecution. Now you might ask, what if I've already made a disclosure? That is a quiet disclosure, wherein I've amended some tax returns, filed some late filed FBARs, and paid the taxes due and owing, but I haven't paid any penalties for not filing the FBARs on time. Well, the IRS asks that you come in under this new streamlined program. But you're not required to come in under this new streamlined program if you've previously done a quiet disclosure. Recently, the Internal Revenue Service has entered into agreements with several foreign banks, many of which are located in Switzerland. If your bank is already in discussions with the Internal Revenue Service and the Department of Justice, and you request to then enter into the Offshore Voluntary Disclosure Program, the government will no longer allow you to come under the program and pay the miscellaneous FBAR penalty of 27.5%. They will now require a penalty of 50% of the high balance of your account over the last 8 years. If you have these foreign bank accounts or other property that are in foreign jurisdictions, and you've either made a quiet disclosure, no disclosure at all, or are contemplating whether to go under the Offshore Voluntary Disclosure Program, I suggest you contact a competent professional to assist you in making your decision on how to proceed.